So interactive brokers and many other popular trading platforms are now reducing the amount of leverage that you were able to previously utilize on stocks like AMC and GME. What's going on, team? It's Ricky with Technical Solutions here with another update. Make sure if you're not subscribed to the YouTube channel, you click that subscribe button, and if you learned something new, don't forget to drop a thumbs up. What I want to talk about is an email that I received today from interactive brokers, and I am aware that a lot of other popular trading platforms are following in the same footsteps, not because they want to, but because they have to, due to the US Securities and Exchange Commission, which of course was created after the stock market crash in 1920, that was created to protect investors and the national banking systems. So you guys can take that information as you please, but one of the things that you have to understand is that a lot of these trading platforms have to abide by the certain rules that the US Securities and Exchange Commission puts in place. I know that I've experienced this when it comes down to trading triple leverage ETFs. You are offered less leverage, meaning that your trading platform allows you to borrow money, more money than you actually have in your trading account. Let's say you have $20,000, but your leverage is 3x. So therefore you can utilize on a normal stock, instead of $20,000, $60,000. But when it comes down to trading triple leverage ETFs are viewed to be of greater risk. So therefore these brokerages offer you less leverage, meaning less money that you can borrow to trade these specific ETFs, as they come at a greater form of risk. And what the US Securities and Exchange Commission put into place is, due to the volatility that AMC, GME is experiencing and all the other very popular stocks right now, they are viewed to be at a greater risk. So therefore the leverage that you were able to previously utilize on normal stocks are no longer going to be allowed when trading these very popular stocks, because they are viewed to be at a greater form of risk. And these brokerages are again simply following the rules that the US Securities and Exchange Commission puts into place. A lot of people were expecting there to be a short squeeze due to certain options expiring on AMC and NOK. And this is something that is supposed to follow shortly after Monday at market open. So one of the things that I want to explain to you is, if you don't understand what a short squeeze is, the whole reason this mess started is there are certain hedge funds that had heavy short positions on the very popular stocks such as GME and AMC, meaning that they borrowed shares and they were betting against Gamestop for it to drop in price. Therefore, when it comes down to shorting, you don't actually own the shares, you just own the agreement that you have to buy back later. A short squeeze simply means that if these shares actually begin to increase in price, theoretically, you begin to lose money if you have an open short position. And as more shares become available, as these options expire, which is supposed to be today on the 29th of January, and these stocks begin to increase in price, it would be in the best interest of these hedge funds to then have to buy back those shares, of course, at a higher price. Some people are even going to the extent of setting limit orders at $400 or $1,000 for their GME or AMC position, because when these hedge funds want to cover their position, they're going to need to cover their positions at whatever outstanding shares are available. And if people have set pre-limit orders at much higher price points, the goal is that they have to buy back these shares, so therefore they buy back these shares at the much higher level. Will this actually happen? We will simply have to wait until Monday at market open. But this is something that a lot of people are talking about and anticipating, and I just wanted to make sure that I do my part in explaining what the short squeeze is and what the goal is. At the end of the day, no one knows exactly what it is that's going to happen. So like many of you, I'm just looking forward to Monday at market open and seeing what the overall reaction is for the overall market. One of the things that I do want to share with you is, just like GME, GameStop, and AMC, we didn't see much fluctuation. Although GME closed at 67% growth on the day, if you guys actually look at the price and where it was trading at yesterday during the aftermarket trading session, it actually closed at a lower price point than where it was at during the aftermarket trading session as of yesterday, meaning Thursday. And a very similar thing to AMC. So we're seeing a lot of fluctuation and not as much momentum or bullish activity as we were before. This is something that you should simply take into consideration leading up to next week, and all I ask you to do is to stay calculated and to stay informed. I wish you guys nothing but the best. Don't forget to stay connected. I really do appreciate you guys getting our free free Facebook group, over 300,000 members. If you guys want to stay connected, we're one of the largest Facebook groups in the world for those who trade in the stock market, and that's that first link down below. Until then, I hope you earned your thumbs up. I wish you guys nothing but an amazing weekend. We'll see you for our Sunday stock talk, and like always, let's make sure that we end the year on a green note. Take it easy, team.